Hi, Mireasset Securities. I'm Derek Schiller, a researcher who has been working with Professor Robert Shiller. I've been working with Professor Shiller and the Barclays team on the CAPE-Shiller Index family for the past 4 years. And we're excited to bring our US sector index to Korean investors. I'm going to tell you about this index strategy and how it might fit into your portfolio. The Shiller Index is an example of a QIS strategy. Quantitative investment strategies, QIS for short, are systematic, rules-based approaches to investing. They're designed to deliver transparent, data-driven exposure across asset classes, helping investors navigate the challenges of today's markets. Barclays, a global leader in QIS, is the index sponsor of this Shiller Index, bringing its deep expertise and a strong infrastructure to support the product. Now, let's hear Professor Robert Shiller talk about the CAPE ratio.
Hello, I'm Robert Shiller. Happy to talk with the Korean investment community. I am the co-developer with John Campbell, my former student. The CAPE ratio stands for Cyclically Adjusted Price Earnings Ratio. And we think we have evidence to show that price to a 10-year average earnings measure is a better indicator of value. You want a low CAPE ratio. And so that's how we invest. With the people at Barclays who have helped develop the strategy, I think we are ready to continue having a success in value investing using the CAPE ratio.
Thank you for introducing Professor Robert Shiller. Professor Shiller is known most widely for his work on irrationality in markets. In the late 70s, he showed that markets tend to fluctuate in ways that are later revealed to be irrational. In hindsight, we can show that past price volatility was driven by emotions and fads. In the 80s, he developed the CAPE ratio, a straightforward extension of price-earning ratios to a 10-year period. The historical perspective helps smooth out the year-to-year noise reflected in standard price-earnings ratios. He demonstrated that investors were missing out by overlooking actual track records, and demonstrated that we can use the CAPE ratio to recognize when narratives are distorting prices. In the 90s, he extended this analysis to show that markets were overpriced, and predicted the price correction seen in the bursting of the dot-com bubble. The CAPE ratio can help find undervalued stocks and warn of overvalued markets. Taking advantage of this information requires both patience and confidence. It can be years before emotions cool, fads die out, and prices come back to earth. The team at Barclays worked with Professor Shiller to refine a strategy that can take consistent advantage of the information in the CAPE ratio. The key is to rotate between sectors every month. We identify the 5 cheapest sectors based on the CAPE ratio, and then remove the sector with the lowest momentum, investing in companies belonging to the remaining 4 sectors. We believe that these sectors are being temporarily overlooked by investors who are reacting to prevailing narratives, and that by cycling through the cheapest sectors each month, the index helps investors navigate these market distortions. Why not invest in all 5 of the cheapest sectors? There can be good reasons for a sector to be priced low relative to historical expectations. And a pure rotation strategy would ignore what many investors can plainly see. We've found that the momentum filter provides a good, rules-based way to exclude these value traps, allowing the index to select those sectors that investors later come to recognize were undervalued. We launched the index family in 2012, and it has beaten the S&P in 10 of the subsequent 12 years. While we can't guarantee future performance, our analysis has shown it to be a rare strategy that focuses on finding value that can also do well in bull markets. We believe this index strategy offers the Korean investor a smart way to invest in the US. The US has historically seen exceptional growth and consistently produced innovative companies that have forged new markets. It may be that the US economic growth will fade in the coming years. But given history, it would be a big gamble to bet decisively against it. Our index has performed very well, not just in our backtest, but through a decade of live performance. It has performed well during rather different economic periods. But we also believe that it is a good fit for the present moment. We're seeing turmoil in the US. The current CAPE ratio across the US market suggests that many sectors are overvalued. The tech sector is reaching a record high. The excitement, particularly around AI, may or may not turn out to be justified. And the winners may or may not turn out to be the companies that look best positioned now. There's a lot for an investor to consider. You may not want to take a stand on who is right and who is wrong. This index can help you invest in one of the most innovative and vibrant economies in the world by selecting stocks that look particularly good relative to historical performance, and without having to bet on which of the current trends are reasonable and which are not. We're proud of this index. We're proud not only that we have been able to convert academic theory into financial practice and see it do well, but we have also been able to help investors avoid hype and exuberance in the market and invest their savings responsibly. We're excited to work with Mirai Asset Securities and bringing our strategy to Korea. Together, we look forward to empowering investors with a disciplined strategy that prioritizes long-term value over short-term noise.